In this video, we're going to talk about defined benefit plans, otherwise known as pension plans. They are excellent tax planning devices, probably one of the best ways to reduce your taxable income through contributions to a retirement plan. However, on the flip side of that, they're very complex. They're expensive to run. They require help. They require actuaries. Tax returns have to be filed, that kind of thing. A best way to think about a defined benefit plan or pension plan is to also compare it to a 401k plan. A 401k plan is a defined contribution plan, meaning that the contributions you put into the plan are defined, and what that plan can pay out to the retiree, the employee once they retire, is all dependent on what was put in, what the performance of the funds were, that kind of thing. Just the opposite, a pension plan defines the benefit. So whatever the benefit to the employee is going to be monthly or annually in retirement. And it strives to constantly have that amount of money in the plan so that it can support those benefits, which means, for instance, if the performance of the funds was not that great, the business has to put more money into the plan, or else the actuary won't sign off that the plan has enough money in it based on when the retirees are going to retire or the employees are going to retire, that kind of thing. The good news is that all of those contributions that businesses put into a pension plan are deductible. And that's where some of the really interesting pieces of this come to light. Because if you're contributing, let's say $200,000 to your pension plan, the entire amount is deductible. And with the rules on SEP IRAs and 401ks, that can be 4 times, 10 times even, depending on how rich the benefits are per employee, can be much higher than what you can put in with like a SEP or a 401k. So if you can afford this kind of plan, if your business is making the kind of money where it needs to be able to defer or expense hundreds of thousands of dollars, the pension plan is there and can be a way to truly get your tax bill down to zero. You can do a lot with this. There's also some issues, as I show on the slide, that there's vesting that goes on. You can set how long an employee has to work to be vested. You can do something called a cash balance plan, which is a cash balance that is a promised benefit in terms of the stated account. There's just different pieces of this to think through. And that's why I say you've really got to have someone helping you with it. And it's important to have someone that is an actuary and someone who is working to make sure that the plan is correct. In the planner that we've set up in the software, we give you a few different amounts that your business would possibly contribute to a pension plan and what you would save in terms of tax dollars there. You can also see that if you have any current pension contributions in the data entry or in your bookkeeping, that it'll pick those up so that it doesn't double count anything. But it is, again, kind of like the 401k or the SEP IRA planner in that it's showing you contributions versus tax savings. But here, there aren't these caps on it. So you can contribute very large amounts if you want to. To set these up, again, complex. You're going to need someone who does this, a company that does this full-time helping you. You have to have an actuary that signs off on the funding each year. You have to file a tax form 5500. But businesses of any size are eligible. And if you are looking for new ways to save money, this is a very powerful strategy. In the risk set here and what do CPAs think of that, it's got a very high benefit, but it has a medium audit risk. So just keep that in mind. But we don't normally have a lot of things here that have a medium audit risk, charitable contributions, some other things that are more likely to get audited than not. But just keep in mind this can be audited at some point. And then if you want to find more information on this, I've got a few links here. You can always reach out to us in the chat button if you need help using the planner. And, again, defined benefit, it is definitely a very powerful strategy. And if you need to figure out a way to start putting hundreds of thousands of dollars into a retirement plan and at the same time get a tax deduction for it, this is the right solution. Thanks for using Tax Planner Pro. Have a great day. Thanks for watching the video and take care.